Let me begin by thanking Oil and Money for inviting me to moderate this. The subject, as Juan mentioned, is prospects for non-conventional oil and gas outside North America. I'll just try to put some data in front of you and point out some of the uncertainties that exist around this and some of the differences of approach necessary outside North America. So our industry is used to large shocks. The oil price fluctuations of the 70s, the collapse of the 80s, the advent of Russia in the market in the early 2000s, Chinese demand in the mid-2000s. But no shock has been quite as big or sudden for a long, long time as the reversal of North America's energy position in the last 7 years. And I looked yesterday that following revision of the July 2013 data in Petroleum Supply Monthly, U.S. liquids production for July breached 11 million barrels a day, which is the highest number since 1973, a remarkable reversal and a truly interesting comment on the peak oil theory. The advent of continuing improvement in technology, particularly production technology, will continue to lift protected U.S. domestic supply. The EIA in its annual energy outlook prognosticates that annual growth in crude oil will grow by 234,000 barrels per day through 2019, when it will reach 7.5 million. This is a significant increase, largely through onshore crude production, particularly from shale and other tight formations. And after 2020, they see a decline, but they still see it at 6.1 million barrels a day in 2040. We're all aware of the dramatic increase in shale gas production that's led to a major disruption in gas trading patterns. Qatari LNG, as the minister pointed out earlier this morning, has been diverted from North American destinations. And in a few short years, the perception that the U.S. would be an importer of LNG has become a perception that by the end of the decade, they will become a major exporter. In the EIA's 2013 reference case, they say natural gas is the world's fastest growing fossil fuel, with consumption increasing from 113 trillion cubic feet in 2010 to 185 trillion cubic feet in 2040. And they see growth in gas consumption in every region covered by the outlook. In the reference case, shale gas accounts for 50% of U.S. natural gas production in 2040. Tight gas, shale gas, and coal bed methane resources in Canada and China account for more than 80% of the total domestic production for those countries in 2040. The geographical distribution of shale oil and shale gas resource around the world demonstrates that potentially many other places contain as larger opportunity, if not greater, than the USA. Argentina, Algeria, Canada, China, Mexico, and Russia all features potentially holding large, technically recoverable resources of both shale gas and shale oil. The question remains, can other countries in the world replicate the same conditions for the extraction of shale gas and shale oil as the USA? And what will the cost be relative to the cost in the USA? To remind everybody of some of the specific conditions surrounding the shale revolution in the US, I would point out the following. The first difference with almost every other country in the world concerns land and mineral rights ownership. The landowner in the US will experience financial gain through his mineral rights should somebody wish to exploit them for shale gas or shale oil. Indeed, much of the early activity consisted of the transfer of profit in land deals from both individuals and companies. The second consideration for land is the question of space. While shale is exploited in population-dense areas in the USA, there is generally a lot more room. The type of activity that built up in the Barnett Shale would be unimaginable in this country or in Germany. The nuisance factor from having a rig and frac fleet in your backyard is not compensated by any rent from the activity as it is in the USA. The force of environmental lobbies in crowded communities is likely to be much greater than in many places in the USA. The third difference is the massive ability of existing data in the USA. Most areas where shale exists have been drilled for conventional oil and gas. As a result, much seismic and well-logged data already exists, giving operators a much clearer picture of where prospective shale is located. Outside the USA, in most places, such data is sparse, meaning that operators have to undertake a phase which approximates to conventional exploration. The next difference, which is possibly the most important, is the size, quality, and efficiency of the oilfield service industry in the USA. By sheer number of rigs, it is impressive. In the USA, between 2000 and 2007, the average number of rigs operating was 1,240, while in the shale boom from 2008 to 2012, they averaged 1,660. In Europe, excluding Russia, the current land rig count is 129. You can extend this parallel to all the other necessary equipment, particularly frac fleets, trucking capacity for sand, water, and proppant. Europe and many other parts of the world do not have scale. The scale of operations required to support shale gas development makes the availability of equipment and logistics critical to the cost of exploitation. Again, the size of US operations leads itself to economies of scale that allows service companies to operate with lower prices but still make good returns. For example, a frac fleet in the USA that might be operating 24 hours a day on simultaneous operations might do as many as 30 fracs a month, while in Europe it will be lucky to do 2. These factors are increasingly important when reviewed in function of the probable production profile for both shale oil and shale gas. High initial decline rates mean that as total production numbers grow, so sustaining them becomes a treadmill of activity. Lastly, the USA is already equipped with a vast network of pipelines for gas distribution and oil, and while in many places the advent of shale gas has meant reversing the direction of flow, the basic infrastructure is there. This is not the case in many other parts of the world. All this does not mean that shale cannot be exploited in other parts of the world. It means that the economics for operators are likely to be completely different, and the appetite for risk will be lower. The upfront investment in equipment and infrastructure will be much higher, and the gas price necessary to make a proper return will be different from the USA. The timing is likely to slip. With that, I will leave the floor to the 3 panelists. They're going to go in alphabetical order, so we'll start with Miguel Galuccio, the Chief Executive Officer of YPF. Miguel.
Thank you, Andrew. Thank you very much. Pleasure for me to be here. Thank you, Andrew, for the invitation. I will quickly go through YPF results so far and more deeply into the potential of shale oil and gas in Argentina. And I will ask you, Andrew, to keep me in line. You have done that before, so I hope so you will do it today. So let's focus first on YPF result. I would like to very briefly show that during the last year, YPF have increased the level of investment in 63% and basically tripled the level of rigs that we have a year ago. We went from 25 rigs to 63 rigs, and at the same time, we grow the workover fleet on 73%. Argentina have a total fleet of 100 rigs. Today, there's not one idle rig in the country, and you will later on see how this tied to the unconventional story. Crude oil production, of course, has followed investment and followed the increase of activity. So we have very steady growth during the last 3 quarters in terms of production and also in terms of gas production, where we have 10 rigs working today. Now, let's go to the unconventional potential of Argentina. That is the main reason why I'm here today. On the left-hand side, you can see the different basins that today have potential for unconventional resources in Argentina. And on the right-hand side, you can see both a comparison for oil and gas in terms of the 3P plus resources of conventional, what you can see in blue, and the unconventional resources in green. Of course, these are estimate numbers, and we can say that for the unconventional, if we miss this for 30, 50%, even if we cut it in half, there's no doubt for Argentina that the unconventional resource is the way to go, and the future of the energy in Argentina is going to be very different if we manage to develop the unconventional resources or if we don't do so. Now let's focus in Vaca Muerta. That is one of the unconventional resources that we have there, the one that is more advanced in terms of prospectivity, and is the one that holds in the Neuquén basin the Vaca Muerta formation. When you see on the left-hand side of the slide is the gas and oil and gas wet window of Vaca Muerta, and you can see there also some dots that are the wells that have been used to delineate basically the thermal maturity of the basin. Vaca Muerta have an area of 30,000 square kilometers, from which YPF hold 20,000 square kilometers of those. On the right-hand side, you can see a log of Vaca Muerta, and we compare that log with what we call the US-based composite. Basically, we are comparing three of the key elements of Vaca Muerta or parameters of Vaca Muerta with the best parameters in the basis of US. So, for example, TOC, total organic content, we're comparing Vaca Muerta with the best one, that is Marcellus in US. Thickness, also between 30 and 450 meters. If we compare with the best in US, that's Eagle Ford, that go all the way up to 100 meters, we see that we have net pay and thickness in Argentina that probably sometimes 3 times of what you can find in US. And more important, and for me, one of the main key elements of Vaca Muerta is the pressure gradient. And we see reservoir pressure between 4,500 and 9,500 PSI compared with the best in US, that's Hazingville, 2,500 to 8,500 PSI. Now, we know we have that potential, and now the key will be how we develop the full potential. So what you see there is Vaca Muerta split in clusters. So there are 75 clusters, and from which now I'm going to focus just in one, a cluster of 390 square kilometers, from where we are start to develop a pilot a year ago of 20 square kilometers. This 20 square kilometers is probably you have read, is the partnership that we just signed with Chevron, where YPF as an operator and Chevron as a 50% partner are teaming up to develop this area. This 20 square kilometers of pilot is going to take 132 wells and $1.2 billion of investment. Today, we have 19 rigs working there, and that area produces around 11,000 barrels of oil per day already. Let's look at the evolution since we got on the development of Vaca Muerta and what is happening. So we have a factory drilling approach to the development of this area. What is very important because it's what is going to bring the operational efficiency that is required to make not only this prospect, but the rest of the prospects economic. We start with well cost of $11 million, and we have drive that cost down to $7 million, and believe me, there's a way to go here. Production also, we have seen cumulative production increasing basically to 2 reasons. We are getting more effective on the way that we frack, and second, we are managing better the pressure after we frack the wells, and that also have helped a lot on having better production profiles. Now, what is missing? As we scale up, and Andrew mentioned some numbers and the importance of economy of scale in order to have a massive development of an area. For us, one of the key elements for factory drilling is going to be logistics. Let me give you a few examples. For example, today, Argentina is importing 80 to 90% of the sand that we use to frack those wells. At the moment, we are looking for mining. It's clear that in 2 years' time, we will provide sands, local sand to our operation. We are moving, all the logistics is done by truck. Today, we have a huge project to do it by train. That infrastructure is being developed and is going to be in place later on. So we have 20 rigs for 20 square kilometers, and we have 30,000 square kilometers of formation to be developed. Very quickly, you can see the production and how it's been evolved. with the level of activities, both oil and gas. The number that I give you, 11,000 barrels of BOE, is the combination of both. Now, let's look at to Argentina and what are the key conditions or key advantages that today Argentina have in terms of basically working there. Long-term contract, we just extend the concession for unconventional from 25 years to 35 years. Excellent connectivity and infrastructure. Vaca Muerta is in an old town, so manpower is not an issue. Water is not an issue either. And the footprint of Patagonia is very favorable for a factory drilling approach. The government just issued a decree 929. This decree is basically giving to companies that come and invest on unconventional more than $1 billion a right to export 20% of the hydrocarbon produced and free disposition of the export proceed. And an improvement on gas price. Today we have a gas price for new gas or incremental gas for the one that we've been producing gas before of $7.5 per million of BTU. And also that comes to the comment that Andrew made that development outside U.S. will require a different set of pricing that the U.S. having. Now, I would like to make a point of the position that YPF have in Argentina and why we are positioned as a partner of choice for anybody that wants to come and develop unconventional resources there. We are the main hydrocarbon producer in Argentina. We produce almost 40% of the total production. We have 93 concessions, 50 on dense exploration blocks. Excellent economy of scale in our operation. We hold 60 of the drilling rigs of the 100 rigs fleet that Argentina have today. We are definitely the leader in unconventional wells in Argentina today, the third largest unconventional acreage holder in America, a fully integrated company, and the leader in the development of Vaca Muerta at the moment. I would like to summarize. There's definitely a potential exists on unconventional outside U.S. The approach to develop unconventional outside U.S., it is different, and it's different for Argentina and maybe different for other places. Vaca Muerta is definitely a world-class shared resources, and more important that it's a world-class resource, I think being proven that is material and have to be proven that can be massively developed. The opportunity to reduce development costs through fit-for-purpose technology and state-of-the-art reservoir modeling and logistics, it is there. Both Argentina and YPF are completely open to investment and partnership to develop those resources, and YPF is the leader and partner of choice in our country. Thank you very much.
Well, the organizers of this conference have given me 300 seconds to speak with you about a topic which really requires hours of conversation. So what I'd like to do is try to use my words to paint a few vivid mental pictures for you that might spur your imagination around this topic and also prompt you to ask some questions during the Q&A portion of the panel. What I'd like to talk about first is the size of the revolution, because it is truly a revolution of enormous scale. I'll give you two pictures from the U.S. and then one on a global perspective. First one, if you look at the U.S. oil production, you've already heard a little bit about that this morning, but I want to get very specific. Talk about the state of Texas, which many of you know is the largest producing region in the U.S. If you go back to 2008, Texas was producing a little over 1 million barrels of oil per day. Today, that rate has more than doubled. And if you go forward into the future, probably somewhere around 2016, the production from the state of Texas is likely to exceed the output of all OPEC nations except for Saudi Arabia. So production will be presumably well above 4 million barrels a day. An enormous amount of growth, most of that coming from the Eagle Ford and the Permian Basin, but also from some other places. You've heard about the shale gas revolution. It is truly revolutionary. You heard some conversation in the last panel about how the U.S. was once thought to be a nation which was going to become the largest LNG importing nation on the planet. Projections were that by 2020, the nation would be importing over 15 billion cubic feet of gas per day. An enormous volume of natural gas coming in by ship. Now the projections are that by 2020, the U.S. will be exporting probably at least 5 billion cubic feet of gas per day and perhaps more. So a completely transformational event there, a swing of 20 BCF a day, and increase consumption of natural gas in the U.S. as well. So two very poignant pictures for you as far as how this has changed the U.S. as far as oil and gas production. If I now turn to the global picture, and if we look around the globe and think about the rocks, which contain unconventional oil and gas, it's not difficult to imagine that these volumes are exceptionally large. The rocks in the U.S. are not unique. There will be other Eagle Fords, Marcelluses, Barnetts, Bakkens found on other continents, probably places bigger or bigger. Miguel mentioned one in Argentina just now, which has enormous potential. But if you add up all of these potential resources, you come to a conclusion which I think is really staggering about the size of the revolution, and that is that the resources present in unconventional reservoirs likely exceed all the oil and gas that has been produced since the dawn of the industry over 150 years ago. So everything that has been withdrawn from the cupboard, if you will, has potentially been replaced. And we have reserves and resources now to last for centuries into the future. So the size of the revolution is absolutely staggeringly large. Both Miguel and Andrew talked about the fact that from a rocks perspective, it is very unlikely that what is being found in the U.S. is not present in other parts of the world. In fact, the inventories that have been done to date, as I said, suggest the number is enormous. But what is unique, as Andrew very nicely pointed out, is that there are some very, very unique above-ground situations in the U.S. that have allowed development of shale oil and shale gas to proceed at a pace which really has never been seen before in the oil and gas industry. If you think about the oil production story in a play like the Eagle Ford, which is in South Texas, in 2010 there was less than a few thousand barrels of oil being produced in that play. And sometime this month or next, production will exceed 1 million barrels of oil per day. So that is how rapidly the production is growing in areas where there is the combination of infrastructure, of service company capabilities, of all the things that Andrew mentioned, which are somewhat unique to America. So what I'd like to do with the last few minutes of my time here, or the last few seconds, I guess, is talk about the technology side of the unconventional reservoir revolution. I'm actually leading the technology program in unconventional reservoirs for ConocoPhillips, and I can tell you this is one of the funnest jobs anyone could imagine. And the reason it's fun is because if you look at the technologies in unconventional reservoirs, they are very, very immature. Really, right now, we do not understand a lot of the physics about how the oil and gas moves through these very tiny pores. Clearly, there are physics operating which aren't ones which we've had to employ or understand on the conventional side. And also, if you look at the hydraulic fracturing side of the business, we are just now starting to understand how hydraulic fracturing creates the conductivity in the reservoir which allows the oil and gas to flow at such high rates. So in the next few years, we expect enormous breakthroughs to occur in unconventional reservoir technology. And why I think that's important to this room is that if you think about what those breakthroughs will achieve, in the U.S., it almost certainly increase the profitability of what are already some of the most profitable plays in the portfolios of oil and gas companies. It will also create opportunities on the sustainability side from an environmental perspective. So enormous positive impacts in North America where the revolution has already taken hold. But also then if you look around the globe and think about where else oil and gas might be developed from these types of reservoirs, those technology advancements will, I believe, create the possibility of commercial production in the next few years ahead and certainly in the decades to come, so that the unconventional reservoir revolution, like other revolutions that have occurred in America, will someday extend beyond its shores and cover the entire planet. So that's all I wanted to share in my 300 seconds. Thank you for your time.
Good afternoon, ladies and gentlemen. Thank you, Andrew. So we're roughly about 10 years into our developments in terms of both unconventional gas and light tight oil. And as we know, most of the asset development to this point has taken place in North America and primarily in the US. And last week there were around about 1,090 horizontal rigs active in the US. Majority of them focused on unconventional gas and light tight oil. And as you've heard just now, we've seen a material increase both in terms of gas production and also liquids production. So this is really having a significant impact. So today, clearly, North America volumes offer the highest value, but that is changing or will change as we start to see the development of these types of plays internationally. And shale and light tight oil plays are starting to develop, albeit at a relatively slow rate as we move through licensing, through exploration, and into pilot and appraisal programs. So through the eyes of a service provider, what are we thinking about? What are we looking at when we look internationally? There are kind of 6 key factors which we tend to focus on. 2 of them really might be considered non-technical, the balance technical. The first 2 being the pricing and regulatory environment. Is that an attractive arena for the development of these resources? And secondly, do we see the transportation and takeaway capacity either in place today or potentially in place in a reasonable time frame to allow the exploitation to take place? From a technical standpoint, clearly the geology has got to be there, and the geology is there, and clearly the analogs with some of the most successful North America plays are clearly in place around the globe. We look clearly at the ability to move service assets into those resources and supplement them with the technology which is moving very, very quickly. Remember, we've kind of had 90 years to perfect the development of conventional oil resources. We've had less than 10 to develop the unconventional resources, and as a result of that, the technology movement is taking place at a very rapid pace. And then finally, scale. Scale is the key to dollars per BOE. Scale is the key to driving the economic value of these resources. And whilst we could not argue today that they are where they're most successful, they're true factory operations. They're the closest thing that come to factory operations in the oil and gas industry. So not surprisingly, the most attractive areas around the globe is where there is a real desire to add supply, and there is a real focus on changing the regulatory and pricing environment to make it the most attractive that it can be. And we clearly see that taking place in a number of places around the globe. I would argue that the supply of both technology and the associated know-how that goes along with that, the transfer of technology, if you like, and also the service capacity is largely moving in place. The kind of proxy for service capacity is generally considered to be a frac fleet. And today, by various estimates, there are somewhere between 20 and 24 million horsepower of frac capacity around the globe, about 80% of which resides in North America, about 20% of which roughly resides outside North America. And one of the things that it is important for us to contemplate when we're thinking about unconventional resources is that capital allocation is somewhat different than a conventional reservoir. And by that I mean that generally the highest value capital asset on location is a rig. In the case of unconventional developments, the frac fleet and all its ancillary equipment and supply chain is significantly greater in terms of its capital intensity than the rig alone. So scale, speed, velocity is very important to driving down dollars per BOE over the long term. I'm satisfied, I'm convinced, that while we may not see the development of unconventionals internationally at the pace at which we may have envisaged about 3 years ago or so, it's happening steadily, it's happening around the globe, and I think we'll see the large international service providers ensure that they work hand in hand with the producers to make sure that we develop those resources economically for them. Thank you.
Thank you all very much. There's something that strikes me in what you all said, and that is this issue of factory approach. The question I would put to you is that does technology in the future have the potential to reduce not just the cost, but also the footprint of shale gas development? If you go back to the beginning of the North Sea and you look at the Forties field, for example, which was developed with vertical wells, if you were developing the Forties field today, you would have done it completely differently. You would have done it with horizontal wells, you would have cut the cost, you wouldn't have such a big platform and all the rest of it. So has technology the scope in the long-term future, Greg, to reduce the footprint that unconventional, particularly shale gas, takes?
You bet. Good question, Andrew. So when we look at the footprint for unconventional reservoirs, there's many different aspects to that. There's the land use, there's the use of water and hydraulic fracturing. It is an industrial operation, so we recognize that it is something which people don't like to see show up in their backyard. So we are working very hard to reduce the footprint both in the scale of surface use and the equipment that's needed on location. Some very interesting things being done on the water side. We are using more and more of the produced water, the water that's produced during production operations, to make up the hydraulic fracturing fluid. In fact, last night I got an email from a colleague in Midland, Texas, who was bragging about how we just did a hydraulic fracturing job where we used absolutely no fresh water, used 100% produced water. So those are the type of advancements I think you'll see. We recognize that the public has very high expectations on the environmental side, and the industry is working very hard, obviously, to try to meet those.
And Tim, you know, one of the things that your company did very successfully was the introduction of simultaneous operations and 24-hour fracking, right? And that in itself helped to reduce the footprint, though.
Yeah, it really has. I mean, the way I look at it, Andrew, there's sort of two key focuses of technology. One is in the surface arena, where the goal is to reduce the footprint, improve the velocity. I was in the Northeast 2 weeks ago in Pennsylvania, and which really probably is the closest analogy really to Europe in many respects. Narrow winding roads, fairly undulating terrain. And I was on a very compact pad with 11 wells to date, with 20 wells planned. So, it's considerable consolidation of footprint. So a lot of technology going into that part of the effort. And the second component, of course, is to really focus on the subsurface. Right. Even in the Eagle Ford, which has been arguably the most prolific resource in the U.S., right. Of the 32 counties which are producing, 75% of the production comes from 25 counties. Yeah. So that tells you that there are marginal plays even in a prolific field like that. So subsurface technology and really understanding, to Greg's point, really how we get mobility of this resource, of which we recover only about 8% today, is the next big frontier for us.
And first, a country like Argentina that's just starting on this venture, the lessons that you've learned in terms of footprint and technology should, Miguel, allow you to lower your well costs faster than they did in the U.S., no?
No, definitely, Andrew. We don't want to reinvent the wheel. Everything that's been learned before has to be applied in Argentina, and it is being applied in Argentina. When you go to a location in Argentina, you will see that we have access to the latest technology. Service companies been in Argentina for many, many years. Yeah. And so now, saying that, I would like to make a point that the recipe of the US to the development unconventional and not necessarily will be exactly the one that we need to apply in Argentina if we want to make the most of our resources. The thickness, the presence of pressure, make a huge difference. We just finished drilling a well with casing drilling. A technology application that probably we all have tried once in a while in our career and never probably find the right application for. We cut 10 days drilling times just because the presence of pressure make a huge difference in a short well. And also in a pad, you don't lock all the wells, so the absence of lock is not necessarily important in a pad. So, yes, definitely we need to learn from what you have done and also have enough creativity to find our own way.
I think another aspect of that, so do you want to say something, Greg? No. Another aspect of that which is really interesting to listen to you guys is that we all know that operators tend to drill the sweet spots first, right? And therefore, to the extent that you start to move out of the sweet spots into the flanks where it's you know, the PIs are not going to be as good as they were in your initial development. You know, is technology going to be sufficient to allow you to lower the cost that those flanks become as profitable or, you know, at least competitive with what you had at the beginning?
Yeah, so I think it definitely will. I think the two things you're seeing on technology right now, which are incredibly interesting, is that many of these plays that people began to develop, people were thinking you would need one well per unit area. And at least in the Bakken and the Eagle Ford, what operators are beginning to find is that you're actually stacking up wells. And Miguel, with 400 meters of thickness, I imagine you'll have many wells stacked up. So technology is allowing us to access even more resource in the sweet spot. A lot of that has to do with the fact that the hydraulic fractures don't grow very high. I know there's lots of people concerned about hydraulic fractures growing up into reservoirs, but the really hard facts are that they grow only a few tens to hundreds of feet, and because of that, we actually have to put in multiple wells on top of each other. And then, Andrew, as you mentioned, getting away from the sweet spot, we will, over time, be able to extract oil and gas at commercial rates from poorer and poorer quality rocks.
Good. So can we change now to a subject which I know is dear to Tim's heart? And I noted that Tim put it as number one in his list of things, which is pricing regulatory. So how do you see the debate over the regulation of hydraulic fracturing outside the U.S., Tim? Are you looking at that country by country, or what do you?
Yeah, I mean, I think that it's interesting to look at the U.S. as a sort of a bit of a proxy, because for those of you who aren't familiar, the sort of state's primacy in terms of regulation has generally preceded. That meaning that the states have established their own regulations for hydraulic fracturing. And they've done that in a collaborative way with industry, both with the operators and with the service companies, to come up with a set of workable regulations, which I think the industry can live with and the industry works well with. So, you know, obviously internationally we still have a lot of work to do. We don't have the same history with the industry in some cases, don't have the same history with hydraulic fracturing, which has been around now for 70 years or so in various parts of the globe. So it does take a forward-thinking, proactive approach and a collaborative approach between all aspects of industry to make sure that we have the kind of regulation which everyone can live with and everyone can operate to.
So do you have a framework in Argentina yet, Miguel? Regulating hydraulic fracturing? Is it still fairly open?
No, I mean, unconventional development is new in Argentina.
Yeah.
The oil and gas law is the oil and gas law that's been there for many years. Right. There's been some interesting discussion between Argentina and U.S. in terms of water acts and the different acts that you have in your regulatory advice, and I'm sure then some of them are going to be taken on because Argentina will need something specific for unconventional for the future.
But you did mention one very interesting point about Argentina and factory drilling. Patagonia is ideal, right?
It's flat.
It's flat, yeah.
Yeah, we have, I've been involved in the early development of some of the unconventional resources around the world in my previous job. Poland, China, Mexico, Colombia, and I think there are quality resources in many places in the world. To me, the question is how many of those can be massively developed in order to have this economy scale that we all are looking for. And I do think there, Argentina have a huge advantage. One is the Patagonia footprint. The second is the fact that service companies are present. When we did the first one in Poland, we moved the equipment from France. Third, the fact that the manpower is there, and that is very important. I mean, you are drilling very close to an oil town. And access of water, and the fact that provinces and countries have been living from oil or royalties from oil for many years. I think those items made probably Argentina the next potential country to experience something closer to what you have experienced.
I agree with you. I mean, there's no doubt that operating in an environment in which oil and gas is a historical industry, where transmission lines are present, where you have not only workers but also communities which have grown up with the oil and gas industry, makes it much easier to advance the development.
Yeah. So, Greg, without asking you to unveil any of ConocoPhillips' secrets, if you looked at unconventionals outside the U.S. now, where would you, I mean, leaving aside the politics, where would you go?
Well, there's many good rocks around the planet, and we've been... Miguel's trying to get me interested in Argentina. There's many good rocks around the world. Right now, we have 4 established operations.
Right.
So China, Australia, Colombia, and Poland. So we're really geographically quite well spread. We see other opportunities. We are trying to pursue additional deals. I think we are looking for countries that have the right attitude as far as regulation, that they see this as an important part of their country's future. And that is...
you evaluate the criteria that Tim and Miguel just pointed out. In other words, footprint, industry, habitual, the fact that the communities are used to the oil and gas industry, all that stuff, that makes life easy.
We really do. This is more, I think, about the human side of the equation outside of the U.S. than the rocks.
Right.
I don't think that actually the areas that will get developed first are the areas with the quote-unquote best rocks necessarily. It'll be the areas where the governments and the communities decide this is important for our future.
I think with that, we'll see if we have any questions in the audience. If we can have microphones. There's one over here. Sorry.
Jonathan Stern from Oxford. Could I ask Miguel, I think I saw on your slide that you're guaranteeing, or the government is guaranteeing producers $7.50 a million BTU for this new production. Should we take that as an indication of what the cost of this new production will be? And then if I could just ask Tim to expand on a comment he made on numbers of wells per pad. I think you said that you are maybe going up to 20 wells a pad. Maybe I misunderstood that, but if you could say a little bit about what's the best practice of wells per pad, how many drilling rigs does that require per pad, and therefore how many, if you like, wells per year per pad could we be expecting?
So thank you for the question, and 2 very good questions. The first one, $7.5 per million BTU is an incentive that the government is putting in order for everybody that is going for development of shale gas or tight gas have an incentive to go and drill those wells. Most of the reserves today of gas in Argentina are basically